Hey everyone, welcome back to Corporate Decoder. Today MYSZ Incorporated just filed their Def 14A, and there is a reverse stock split on the table that matters. Quick note, this is not financial advice, just my take on public filings for educational purposes. Stock splits can be tricky for micro-cap companies, and this one has a few layers to unpack. Alright, let's dive into this filing from MYSZ Incorporated. This is essentially their proxy statement for their shareholder meeting happening on the 21st of July 2026. It is like an annual check-in where they tell shareholders what is going on and what they're voting on. The main event here is a set of proposals shareholders will vote on. Most of them are pretty standard, like electing directors and approving executive pay, but there are a couple that really catch the eye, especially a reverse stock split and the ability to issue more preferred stock, what they call blank check preferred stock scroll proposal number. One election of directors to scroll. First up, they want to re-elect two directors, Oren Brunitsky and Guy Zimmerman. These folks have been on the board and their experience is noted. Oren Brunitsky has a background in retail technology and Guy Zimmerman has experience in business development in tech and retail. They also have other directors like Ronen Luzon, the CEO, Eric Kaufman and Roy Golan. It looks like the board is pretty stable, with most members having a good chunk of experience in relevant industries. Scroll proposal number 3, reverse stock split proposal, scroll. Now this is where things get interesting. Proposal 3 is all about a reverse stock split. Basically, they want the board to have the power to combine existing shares into fewer higher priced shares. The range they are talking about is from 1 share for every 2 existing shares, all the way up to 1 share for every 30 existing shares. This is a pretty wide range and gives the board a lot of flexibility. Why do this? The filing spells it out. They were notified by Nasdaq that they are not meeting the minimum bid price requirement to stay listed. They need to get their stock price up to at least $1 per share for 10 consecutive business days to stay on the Nasdaq capital market. This is a common reason for reverse splits, especially for smaller companies. They're hoping this will make the stock more attractive to investors, particularly institutional ones who might shy away from low-priced stocks. Historically, for microcap companies like MYSZ Incorporated, about half of those that do reverse splits end up delisted. Anyway, think about Kodak back in 2021. They did a 1-for-20 reverse split and holders saw about a 40% additional drawdown over the following 90 days. A $1,000 position there became about $600. While MYSZ's situation isn't identical, the pattern often leads to more pain for existing shareholders. This reverse stock split means the number of authorized shares will stay the same, but the number of shares actually being traded will go down dramatically. This could have an anti-takeover effect, meaning it could make it harder for someone to buy up a controlling stake in the company. The board says this is not their intention, but it is a potential consequence. The split will also adjust existing stock options and warrants. The exercise price will go up proportionally, so the total cost to exercise them stays roughly the same, but you'll get fewer shares. For most US shareholders, this is meant to be a tax-free move, meaning you won't pay taxes immediately. However, if you end up with fractional shares and get cash instead, that cash might be taxed. It is always best to check with your tax advisor on this scroll proposal number. For approval of an amendment to the company's amended and restated certificate of incorporation to authorize the issuance of blank check preferred stock as scroll. Then there is proposal 4, the blank check preferred stock idea. This is another significant one. They want to authorize 10 million shares of preferred stock that the board can issue in different series. The board would have full control over the terms of this preferred stock, like dividend rights, voting powers, and liquidation preferences. The company says they have no current plans to issue this preferred stock, but they want the flexibility. Think of it as having a reserve of ammunition. Preferred stock can be used to raise capital quickly for acquisitions or to offer different investment opportunities without diluting common shareholders as much as issuing more common stock. However, this blank check power also comes with risks. The board could issue preferred stock with rights that are superior to common stockholders. This could mean preferred shareholders get paid before common shareholders in case of liquidation, or they could have voting rights that dilute the power of common stock. It can also be used as an anti-takeover measure. Looking at the company's financials, which are pretty critical here, the audit committee reviewed the financial statements for the year ending the 31st of December 2025. Let's look at the auditor's fees. Sumchokin billed them $272,486 for audit fees and $40,885 for tax fees in 2025. For 2024, it was $244,196 for audits and $25,959 for taxes. These numbers show consistent spending on auditing services. When we look at who owns the stock, Ronen Luzon, the CEO, owns about 7.53%. The total ownership by all executive officers and directors is around 13.74%. This is a pretty standard figure for a company of this size. It shows the insiders have some skin in the game. Let's check out the executive compensation. For 2025, CEO Ronan Luzin received a total compensation of $543,281. This included a salary of $268,471, stock awards of $176,000, and other compensation. In 2024, his total compensation was $451,000. For Billy Pardo, the CTO, her 2025 compensation was $247,486, and for 2024 it was $260,000. Borja Sombrero Saralegui, the Chief Growth Officer, made $243,760 in 2025 and $100,350 in 2024. The filing has a section comparing pay to performance, which is always a key indicator. In 2025, the compensation actually paid to the CEO was about $507,000. For the other named executives, the average compensation actually paid was around $214,000. Now, here is a stark contrast. The value of a $100 investment made on the 31st of December, 2023, declined significantly. By the end of 2025, that initial $100 investment was only worth $14. That is a huge drop. So compensation paid to the CEO actually decreased from 2024 to 2025, while for the other executives it increased on average. Yet over the same period, the stock performance was quite negative. This disconnect between pay and performance is something to watch. Scroll proposal number. To approval of compensation awarded to named executive officers. Scroll, this brings us to Proposal 2, an advisory vote on executive compensation, often called Say on Pay. They're asking shareholders to approve the compensation awarded to their top executives. The board recommends voting for this proposal, which is typical. However, given the stock's performance we just looked at, shareholders might have a different opinion. This vote is not binding, but the compensation committee does consider the outcome. Scroll proposal number. 3 reverse stock split proposal. Scroll. Going back to the reverse stock split, the board is asking for discretionary authority here. This means they could enact the split at a ratio they decide within the 1 for -2 to 1 for -30 range, and it needs to happen by the 21st of July 2027. Their main reasons are to meet Nasdaq listing requirements and make the stock more attractive. However, it is crucial to remember that a reverse split doesn't magically fix underlying business issues. If the company's performance doesn't improve, the stock price might just fall again after the split, potentially leading to more dilution or even delisting down the road. Scroll proposal number 4, approval of an amendment to the company's amended and restated certificate of incorporation to authorize the issuance of blank check preferred stock. Scroll, the authorization of blank check preferred stock is also a major point. While they state no immediate plans, this gives the board a powerful tool. They can create and issue preferred stock with terms that might not always benefit common shareholders, like having priority on dividends or liquidation. This could be used strategically for future funding or even to fend off unwanted takeover attempts. Scroll proposal number. 5. Ratification of the appointment of Sam Chai-kin as independent public accountant for the fiscal year ending the 31st of December 2026. Finally, they're asking to ratify the appointment of Sam Chai-kin as their independent auditor for 2026. This is a routine matter, and the fees are laid out for 2025 and 2024. Overall, MYSZ Incorporated is facing a critical juncture. The proposed reverse stock split is a direct response to Nasdaq's delisting threat, which is a serious concern for any publicly traded company. The blank check preferred stock authorization adds another layer of complexity, offering flexibility but also potential risks for common shareholders. The compensation structure, particularly when viewed against the backdrop of the stock's performance, is also something to keep a close eye on. The risk I'm watching is whether these moves will actually improve the company's fundamentals or simply be a temporary fix before further challenges arise. Alright, that is my take. Stay decoded. Oh, and the research tools I actually use are linked in the description. They help keep this channel going. If you want to support the channel, please like this video and subscribe for more analysis. Check out the Discord in the description.